Thank you for taking time to watch this video on the changes that are being introduced into the Pegasus Payroll solutions for completion of the 2015-16 payroll year end, and for the setup required to start running the payroll in the 2016-17 tax year. Hello everybody, my name is Steve Power and I'm a product specialist here at Pegasus Software. What is required to complete the 2015-16 year end? I will give you a step-by-step guide to complete the 2015-16 year end. We'll look at using RTI to send the end of year submissions through to HMRC and the other changes that are in place prior to the end of the current tax year. Payroll changes for 2016-17 tax year. We'll look at the legislation changes that came into force and therefore the changes we've made to the software to accommodate that new legislation. We'll start running the first payroll in the 2016-17 tax year. And finally, we'll also look at the new functionality that's been added into Opera 3. I'll be using Opera 3 to run through the year end, but what I'll be showing you is equally applicable to Opera 2. Pegasus Software maintain their payroll solutions to be compliant with HMRC legislation and are an HMRC recognised software supplier for our payroll solutions. We therefore ensure that we strictly follow the guidance that HMRC issue so that our payrolls remain accredited. That's important to us. So what are the version numbers that you need to upgrade to run the payroll end of year? If you've got Opera 2, then you need to be on version 7.50. If you've got Opera 3, then you need to be on version 2.30. For Capital Gold, it's version 4.01. And you also need to upgrade the online filing manager to version 3.60. As you can see, you will need to ensure that you're running the correct versions of our software to be able to run the payroll year end. With a new version comes a new activation key, apart from Capital Gold. When should you apply the upgrade? Pegasus will have shipped customer copies of the payroll upgrade CDs to all of our partners in early February. The software can be installed in any pay period before the end of the 2015-16 tax year end. We recommend, however, that you install the software as soon as you receive it from your partner. Once installed, your software is in place, ready to run the year end processes, submit the final FPS for the 2015-16 year end, submit the final EPS for the 2015-16 year end, and ready to start processing in the new tax year, the 2016-17 tax year. The last point you should install the upgrade is before you start running the final payroll in the current tax year. This is because you'll need to run the payroll year end processes, the year end reports, and you must have the software already installed to do that. But that's very late to find out if there's a problem. So we recommend that you carry out the upgrade as soon as you receive it from your partner. To help you understand how to run the end of year, start the new tax year, and what are the changes in the new tax year, then we produce two documents to guide you through. When you receive your CD from your Pegasus partner, you'll find that there is a documents directory on there, and these two documents are located in that directory. First of all, there is a legislation and product changes guide. This is a guide to help you understand the legislation changes and other changes that affect this year's payroll upgrade. This guide helps you understand the changes we have made within Opera and the online filing manager to support the legislation. We also have produced a checklist guide. This is a guide to help you understand the steps to upgrade Opera, upgrade the online filing manager, complete the year end, send the final RTI submissions through to HMRC, and start the 2016-17 tax year. Of course, many of our customers will want their partners to help them through the upgrade process and running the payroll year end. If you're going to get help from a Pegasus partner to upgrade your system and help you run the end of year processes, then you need to contact them earlier rather than later, because this is a very busy time of the year for them. Okay, what are the changes made for completing the 2015-16 year end? The P6s are updated to the 2015-16 year end. Under the end of year special reports, there's an option called P60 end of year returns. This option allows you to produce the printed P60s that are given to your employees. If you choose to print the P60s, then you select the print option and select either the HMRC version or the Pegasus Business Forms versions. These printouts can be run selectively for a department range and for an employee range. The HMRC single sheet laser portrait version can be ordered from the website, www.gov.uk. If you're using the Pegasus Business Forms version, then you go to that website, as you can see there. There's two versions of the Pegasus Business Forms version. There's something called a MAL P60. This is a two-part return that includes the P60 end of year certificate that is sealed by the heat of the printer. You simply take it out of the printer, fold and seal. It also includes a file copy. There's also a MAL P60 PS. This is a peel and seal version. This means that it can be printed, checked later, and then sealed by removing the strips, and then fold and seal it. Here is last year's option on the stationary order line on the HMRC website. If you're using the HMRC version, then you'll need to choose this P60 single sheet shortened version. There isn't a file copy, so why don't you order double the amount? The layout has not changed other than it's been updated for the tax year 2016. You'll also need to fill in the online order form from the HMRC site. This is all part of the P60 ordering section. Order them in a timely manner. Remember that these must be given to your employees by the 31st of May 2016. If you have Opera 3, then you have two other options. You can use the email P60 option. This allows you to email the P60s to your employees. The P60 is encrypted so that only that one employee can see their own emailed P60. This functionality also allows employees to have their pay slips emailed to them, and this comes free of charge within Opera 3. There's also another option that allows P60 to be published to the web. This allows employees to look at their P60s online using devices such as laptops, iPads, or even smartphones. And again, it is also possible to publish the payslips to the web as well. This functionality is known as Payroll Self-Service, and again, it's available to Opera 3 customers at a charge. If you want more information on these options, then go to the Pegasus website or ask your Pegasus partner. So what is the process to run the end of year? Before you do anything, take a backup of Opera 2 or Opera 3. Once you've got that backup, then upgrade Opera 2 to version 7.50 or upgrade Opera 3 to version 2.30. Remember, you should be installing this software prior to running the last payroll within the current tax year, or preferably before that date. You also need to run a UDS when you install a new version of the software. So let's go through and let's run the UDS. Within Administration Utilities, there's an option to update the data structures. It allows you to select which companies you want to upgrade. Then it displays this option here. This allows you to update the PAYE NI tables. What it's telling you here, if you tick this option, Table 1 will become effective from the 6th of the 4th, 2015, and Table 2 will become effective from the 6th of the 4th, 2016, which is exactly what you want. You want to be able to run the current payroll in the current tax year, and you also want to have the system set up so that you can run the new payroll in the new tax year. What you'll find if you look at your PAYE tables now, you'll see that Table 1 is likely to be in the previous tax year and Table 2 is in the current tax year. And that's absolutely fine up until we run the final payroll. And once we've run the final payroll, we need to move into the new tax year. So we recommend you select this option to update those tables. If you don't do it at this point, then there is another way of doing it. Within the Payroll Utilities option, there's an option here to copy the statutory rates. And this allows you to go through and update the tables such that Table 1 is updated to the current tax year and Table 2 is updated to the new tax year. So you have two options to update those tables. Upgrade the online filing manager to version 3.60. We recommend that you upgrade Opera first before you upgrade the online filing manager. And once you've upgraded the online filing manager, then you run the normal payroll processes. So you add the timesheet, you check the temporary and the permanent payment values, you confirm the deductions are correct, you run the payroll calculation, and you print out the pay slips. And you also print out any other reports that you would normally produce with the payroll. So things like this period summary and the to-date summary reports. You also check the P32 processing to make sure that the funding and the payments are correct. So you run the normal payroll process, excluding running the update, because before you run the update, you need to run the end of year procedures. So what is the process to run the end of year? Go into the end of year special reports and take the option to produce the P60 end of year returns. So let's do that within the software itself. If I go into the end of year special reports, select the option here to run the P60 end of year returns. So select the payroll groups and decide which group of employees you want to send them to, and are you sending the printed versions, the web versions and the email versions. In my example here, I'm going to have a printed version that's going to be printed on the Pegasus Business Forms version, and I'm also going to produce the online versions that are going through to the web. And I'm going to send these through to screen. So here is the P60 that's going onto the web, and we can see it's set for the tax year 2016. Then I'm going to go for the printed versions that are going onto the Pegasus Business Forms, and here's the P60s that are in that printed version format. And that completes the production of the P60s. The next thing you can do is print out the P35 substitute. And again, let's show this in the software. So again, under the end of year special report, print out the P35 substitute. It says you do not need to send this through to HMRC because it's all included within the RTI submissions. And here is my P35 substitute. And finally, I can go through and print out the payment and deductions list. And again, within the software itself, under the end of year special reports, print out the payment and deductions list. You go through and you select out each of the payment types and each of the deduction types. So in this case, I'm doing it for the basic pay. Take this option to print it. And once I've printed this, I will then go through and reprint this for the overtime and for each of those other items that are on there. Now you return to the normal processing of your payroll. If the payroll is linked to the nominal ledger, then run the nominal ledger analysis command. If the payroll is linked to the cash book, then do the cash book transfer. If the employees are paid by BACS, then generate the BACS output. The next thing we need to do is to send the RTI submissions through to HMRC. The first RTI submission is the full payment submission, the FPS. So we need to go through and create the final FPS for the 2015-16 tax year. So let's do that within the software itself. I'm going to go to the RTI submissions and generate the FPS. It's a regular FPS that I'm going to create. It shows there are 36 employees, and I wish to create it. Oh, here we go. I'm happy with that. I have therefore created the FPS. I can now submit it using the online filing manager. So I'll go through, as you would normally do, generate the FPS and submit it through to HMRC by giving them the password to the gateway, confirming the password and submit. And that has sent the final FPS through to HMRC. Remember, HMRC have a tendency to take down their online systems at the end of year so that they can be updated. There's a useful tool which allows you to check the service availability. If you go to this website here, it shows you all of the online systems that HMRC are using. And what you're specifically looking for is the PAYE service. So here you can see when I looked at that, it told me that the full service is available. If there are issues there, then I can press this link here and it will tell me what the issues are, and potentially it will tell me when the service is going to be up and running. Remember also, this is a busy time of year, so there might be some downtime on the HMRC site, although I have to say the RTI sites have been working well over the past 12 months. The next thing we need to do is send the employer payment summary, the final EPS for the current tax year. So again, let's create this within the software and submit it. So again, I go under the RTI submissions and select the option here for the employer payment summary. The one I'm choosing is the final EPS for the 2015-16 tax year. It just warns you, Have you sent the FPS through to HMRC? Yes, we've just done that, so we're happy about that. It then shows you the recoverable values that have been automatically populated, and these are the cumulative values for the current tax year. Just check to make sure they are all correct, and if you're happy with those, then let's generate the final EPS. So here's the audit trail report, and here's the EPS created, in which case I can therefore use the online filing manager to submit. And take this option to submit that final EPS. Now that we've sent the RTI submissions, the next thing we need to do is to run the payroll update routine to close the final pay period for the 2015-16 tax year. So we run the normal process of running the payroll update. Let's do that within the software itself. Under Utilities, I now run the update this payroll group. Okay, I'm happy that the dates are correct. And as it normally does, it allows me to clear down the pension schemes. And it's just warning me, have you sent the FPS? Yes, I've sent the FPS. And it's just confirming that the other RTI submissions have been sent. This has now completed the final payroll for the 2015-16 tax year. The next thing I need to do to complete the end of year is to run the end of year clear down. So again, if I go into the end of year reports within the software itself and take this option here for the end of year clear down. Are you sure you wish to continue? Yes. The current tax year will be increased from 15-16 to 16-17. Yep, that's exactly what I want to do. Just confirms that you've sent your FPS and EPS submissions through to HMRC. And then it allows you to clear down the cumulative values. So on the payment side, I'm going to select all. And on the deduction side, I'm also going to select all to set their cumulative values to 0. You don't have to do that. If, for instance, you wanted the loan repayment not to be set to 0, then you can turn them on or off. In my case, however, I'm going to return everything to 0 and select OK. It has now done the end of year clear down, and it is just asking you to check to make sure that the data is valid. So what are these final checks that we should do to make sure that the system is now in the 2016-17 tax year? Well, go into the set options and make sure that the current tax year is set to 2016-17. So within the software itself, if we go into the set options, is the current tax year now set to 16-17? Well, I can see it is, so in which case I'm happy that it has done that correctly. Next, let's just make sure the calendar is also in the correct tax year. So again, within the software, under the utilities, we select the calendar option to make sure that is in the 16-17 tax year. And again, mine is. And the next thing we should check is just to make sure that the figures are correct in the PAYE NI tables. So again, within the software itself, let's look at the PAYE tables. Is table 2 set to 16-17? And are the income tax bandwidths correct? Are the employers and the employees' national insurance figures correct? These should all be correct because they're being copied in from within the system itself, but it's worth double checking this. And your final checks. Are you subject to small employers relief? If your total NI Class 1 contributions are less than 45,000 in the previous tax year, then you can reclaim things like SMP and what have you at the rate of 103% compared with the standard rate of 92%. If this is actually correct, then within the software itself, we can turn the flag on for small employers relief. On the options page 2, entitled to small employers relief. If you are, then turn that particular flag on there. And the final things you need to do are just to make sure that the employee tax codes are correct. And that basically has then completed the payroll ready to run the first payroll in the 2016-17 tax year. Remember, this sequence of events is clearly detailed in the checklist guide on the Opera CD. If you are in any doubt, then please contact your Pegasus partner for help and advice. What if you made a mistake with your submission to HMRC and now are transacting in the new tax year? Can it be corrected within Opera? Well, the answer to that is no, it cannot be corrected in Opera. However, if you log into your account on the HMRC website, you'll see that there's an option called Earlier Year Update. This allows you to manually adjust the figures held on the HMRC site. So the answer is yes, you can, but not within the Pegasus Payroll software. Okay, so what are the changes in the 2016-17 tax year? Income tax bandwidths. The basic and higher rates have changed in the 2016-17 tax year. The basic rate bandwidth has increased by £215 to £32,000. Therefore, the higher rate starts at £32,001 and goes up to £150,000, and the additional rate remains exactly the same at £150,000 plus. From the 6th of April 2016, the Scottish rate of income tax applies for people whose main residence is in Scotland. The rest of the UK income tax rates are reduced by 10% in Scotland, and then the Scottish rate of income tax is added. The Scottish rate of income tax is set by the Scottish Parliament, and in the 2016-17 tax year, this has been set at 10%. So the net effect is that Scottish taxpayers will be paying the same rate of income tax as the rest of the UK. Taxpayers in Scotland will have a tax code with an S prefix. So for example, 1100L tax code will become S1100L. Within the software, we've added a new table for the Scottish rate of income tax. Let's have a look in the software. Under the payroll utilities, there is now an option for Scottish tax. And if we look at table 2, these are the bandwidths for 2016-17. Note that the percentage rate includes the Scottish income tax rate. You don't actually add an S to the tax code. If we look at an individual, we can see here, there's an option here to identify whether they are a Scottish taxpayer. If they are, then you simply tick that box, and what will happen is the tax code will automatically have the S prefix added when you generate the FPS. To make it easier to change to the Scottish taxpayer, we have modified the Global Tax Changes option. We go and have a look at that. Under the tax code changes here, under the action button, if we select an employee, we can now define which range of employees we want or which departments we want, and on bulk we can select this box here which will identify them as Scottish taxpayers. That will then take you to this screen here where you can then individually go through and mark them either as a Scottish taxpayer or as a non-Scottish taxpayer. So it should make it easier for you to set up to the system and identify those that live in Scotland. Okay, what about personal allowances? Anyone born after the 5th of April 1938, they've changed. They've risen by £400 from £1,060 to £11,000. For anyone born before the 5th of April 1938, they've risen by £340 to £11,000. In other words, they've now been brought into alignment. There is a general uplift in the tax codes with the L suffix by 40. It rises from 1060L to 1100L. And the emergency tax code is also set at 1100L. What about the national insurance bandwidths? There are two thresholds used to calculate national insurance. One is the primary threshold for employees and the other one is the secondary threshold for employers. However, there are no changes in these bandwidths. They remain exactly the same in the 2016-17 tax year. So therefore, from an employee perspective, between the primary threshold and the upper earnings limit, the NIC rate is 12%, and above the upper earnings limit, the NIC rate is 2%. Again, that hasn't changed. Similarly, from the employer's perspective as well, from the secondary threshold, above the secondary threshold, it remains at 13.8%. A new NI category code letter of H has been introduced. This NI category letter identifies employees who are an apprentice aged under the age of 25. Employers' national contributions for an apprentice aged under 25 is being set to the reduced rate of 0%. A new threshold called the Apprentices Upper Secondary Threshold, AUST, is being introduced. Employers that have apprentices under the age of 25 who earn over this threshold will then be subject to the employer's national insurance contributions. For the 2016-17 tax year, the apprentice's upper secondary threshold will be aligned with the upper earnings limit, i.e. earnings above AUST will attract employers' national insurance at the rate of 13.8%. This has been introduced to encourage apprenticeships amongst people aged under the age of 25. You may recall as well, last year they introduced a new NI category code letter called M, which was introduced for employees aged under the age of 21. Together with the new NI category code for this upper secondary threshold, UST, employers that have employees aged under 21 who earn under the UST were also subject to the zero rate employers' national insurance. Here is a list of the employer NI contribution percentages for the various NIC bandwidths for employees that are aged under 21 and apprentices aged under 25. Statutory payment rates. Statutory sick pay, the weekly rate for days of absence due to sickness remains the same at £88.45 for employees with an average weekly earnings of £112 or more. Similarly, statutory maternity pay, statutory adoption pay, shared parental pay and statutory paternity pay all remain the same at £139.58 per week. Remember, at the start of the 2015-16 tax year, additional statutory paternity pay was replaced with shared parental pay and ordinary statutory paternity pay was renamed to statutory paternity pay. Therefore, throughout the system, references to OSPP have all been renamed to SPP. From the 6th of April 2016, two student loan plans apply with different earning level thresholds. For Plan 1, the student loan threshold rises by £160 to £17,495. For Plan 2, a new student loan threshold of £21,000 is being introduced. Student loan repayments must be deducted when the employee's earnings rise above the relevant student loan threshold. If a new employee is repaying a student loan, then you will need to ask them which type of plan they're repaying under. For a new employee, their P45 will only state that they're repaying a student loan. It doesn't tell you which plan type is being used, so you'll need to ask them that question. If they don't know, then put them under plan type 1. And if and when you get an HMRC student loan repayment SL1 start notice, this will tell you which plan to use. Within the software itself, these plans are stored against an individual under the Action, Details and Bank. Here we have Student Loan Plan 1 or Student Loan Plan 2, and you select whichever one's relevant. From October 2012, workplace pensions reform started. By October 2015, more than 5.4 million workers had been auto-enrolled into workplace pensions. The qualifying earnings lower threshold and the auto-enrolment earnings trigger remain the same. However, the qualifying earnings upper threshold has risen by £615 to £43,000. The employment allowance allows the employer to reduce their Class 1 national insurance bill by the value of this allowance. This has risen from £2,000 in the 2015-16 tax year to £3,000 in the 2016-17 tax year. Payrolling of benefits in kind in real time. Most benefits in kind can now be processed through the payroll. This means that the employee will pay tax on the benefit in kind each time the payroll is run. If we look at a payment profile, we can see here that I've set up a medical payment profile and I've set it to be the type of B for benefit in kind. This means that this will appear on the payslip and tax will be deducted against this payment each time the payroll is run, i.e. the tax on the benefit in kind is effectively in real time. This means that you will not need to produce a P11D at the end of the year because the tax has been accounted for throughout the year. You can, however, continue to report benefits in kind on the P11D after the end of the year in the normal way. If you wish to operate benefits in kind in this manner, you must register with HMRC by the end of the current tax year, i.e. by the end of the 2015-16 tax year. There have been some changes to attachment orders. The Department for Work and Pensions has introduced a new higher rate direct earnings attachment order effective from the 6th of April 2016. This new DEA has been introduced to reclaim benefits from someone who has claimed them fraudulently. Within the software itself, we can set up an attachment order to an employee via the processing form attachment orders. If we create a new attachment order for this direct earnings attachment, note there is a new option on here called the higher rate DEA. This therefore notifies the system to apply that new higher rate. This option is enabled only when the payroll is in the 2016-17 tax year. The Scottish Parliament has introduced changes to the rates and bands used for processing of Scottish court orders. In particular, the earnings arrestments and the current maintenance arrestments have changed. These changes are effective from the 6th of April 2016. The data tables in Opera have been updated with these new rates and bandwidths. There have been some minor changes introduced. The company car fuel type E used for zero-emission cars is no longer valid. Cars that had this fuel type should be changed to type A, which is used for all of the cars. This information is recorded in the benefits section within the personnel module. Between April 2016 and November 2018, the female state pension age will increase more rapidly to 65. The data tables in Opera have been updated with these new state pension ages and dates. Removal of contracting out of the state second pension. In 2016-17 tax year, a new single-tier pension will replace the basic state pension and the state second pension. This means that contracting out of the second state pension into contracted out salary-related schemes, COSR schemes, will be abolished. Both the employer and the employee can still pay into a COSR scheme, but not on a contracted out basis. COSR NI category code letters D, E, I, K and L will no longer be valid, and the upper accrual point band for these NI category letters will also be removed. When you run the end of year clear down, the system will automatically convert these COSR NI category letters to the relevant non-contracted out equivalents, as you can see here. There have been several changes made to the Nest contribution files. Contributions for Nest pensions can be held onto during the employee's opt-out period. If employees do not opt out, then contributions that are being held onto during that opt-out period must then be released through to Nest. A new option called Separate Files for Held Onto Contributions has been added to the Payroll Maintenance Pension Scheme form. Let's have a look at that form. If we look at Nest, you now have this option here for this separate files held onto contributions. This option controls whether held onto contributions are held and sent to Nest separately for each pay period. If this option is not selected, all contributions that are held onto are sent to Nest in a lump sum. Also, 2 new contribution frequencies have been added to Nest. If we look at the pension group for Nest and we look at the payment frequency, the standard payment frequencies of week, 2 weekly, 4 weekly and monthly are still there. However, the 2 new categories added are A, tax weekly and B, tax monthly. And finally, 2 payment exception reasons have been removed for Nest. It is no longer possible to choose stop contributions or duties fulfilled elsewhere. Instead, you must use the no further contributions payable. This is used on an employee record where they stop making contributions into their Nest pension scheme. There have been some minor changes to the FPS. NI category letter H is included in the FPS for an apprentice aged under the age of 25. NI category letters D, E, I, K and L have been removed, as well as the SCON and the ECON numbers. These were used for contracted out pension schemes. Contracting out is no longer an option that's available. If an individual is flexibly accessing their pension or receiving a pension death benefit as set up on the Additional Information tab on the Details and Bank form for an employee, then this information is included in the FPS for the relevant pay period. The tax regime is also included in the FPS. This can either be Scottish rate of income tax or rest of UK. And finally, it is no longer possible to use the late PAY reporting reason code E. This was previously used by micro-employers using the temporary on or before relaxation. This option has now been disabled within the software. There is also a change to the EPS as well. The question and declaration section has been removed from the final EPS of the year because this is no longer required by HMRC. Okay, so that concludes the changes that come into force for the 2016-17 tax year. So what do you need to do to set your system up to run the first payroll in the new tax year? Well, a sort of belt and braces approach, take a backup. The next thing you need to do is you need to make sure that you've updated the PAY-NI statutory payments table. And remember, we saw this earlier, you can do this in one of two methods. You can do it from running the update data structures, or you can do it from copy the statutory rates. Let's just review that within the software itself. If we take the option to run and update data structures, we select which companies we want to update, and then we have this option here that allows us to go through and make Table 1 effective from the 6th of the 4th, 2015, and Table 2 effective from the 6th of the 4th, 2016. In other words, those PAY-NI statutory payments tables, Table 1 will be for the current tax year, Table 2 will be for the new tax year. And that's exactly the position we need to be in to go across into the new tax year. The second method was within the payroll itself. Under the utilities, you have this option here to copy the statutory rates. And if you take the system default, Table 1 is the previous tax year's table, Table 2 is the next year's tax table. Press OK and it'll automatically update those for you. You need to check that that data is correct. And again, we looked at this earlier. So what I would suggest you would do to make sure that's correct is, first of all, go into the PAYE tables and make sure that Table 2 is for the 16-17 tax year and that these figures here are correct for that tax year. I would also suggest that you go into the calendar and make sure the calendar default is tax year 16-17. And I would also suggest that you look at the set options to make sure that the current tax year also is set to 16-17. And what are your final checks? Are you subject to small employers relief? In other words, is your Class 1 NI contributions less than 45,000 in the previous tax year? If it is, then you can recover 100% of the statutory payments, SMP, SPP, shared parental leave and the like, plus there's a 3% compensation for doing so. And we saw that earlier. You would go into the set options and under the options page 2, this option here allows you to turn on the entitlement to small employers relief. Check your employee details. For example, are there any new tax codes for your employees that you've been notified via HMRC on their P6 form? Remember as well that there's a new NI category letter H for apprentices that are under the age of 25. Also, do you have people that have their permanent residence in Scotland? In which case you need to turn them on as a Scottish income taxpayer. Also review your student loans. All of your students so far will be on Plan 1, but there are Plan 2 that is coming into force. So you need to check any new people, are they to be operated under the Plan 2 for the student loan. Remember as well that there is a global tax change option available to you. So if we hop back into the software, under the global changes, you've got this option here for the tax code changes. And what we know, for instance, the L tax code goes up from 1060L to 1100L, in which case there's a 40 uplift. You can do this globally by selecting that L suffix there, etc, etc, etc. And that's it. Once you've checked the employees, you're then ready to start running the first payroll in the new tax year. Let me finish off with looking at the Pegasus website. If you go onto the Pegasus website, pegasus.co.uk, there's an option there for the Media Centre. And under the Media Centre, there's something called Product Demos. And this allows you to go through and run a number of these product demos. From a payroll perspective, there's a number of pre-recorded videos on there. For those of you that are starting to introduce auto-enrollment, then there's a video that introduces auto-enrollment, and there's another video that shows you how to implement auto-enrollment within Opera. We've also got various new functionality available to Opera, such as salary sacrifice, payroll self-service, where you have employees that can use the web to look at their pay slips and their P60s. You can also use the email pay slips and P60s. And also there's a new timesheet function that allows you to enter timesheets over the web and update the Opera payroll with them. So there's some useful videos there to look at. Also as well, from a general Opera perspective, there's credit management and debt management videos that are available to you, as well as things like Pegasus Business Cloud. If you're looking at running your Pegasus system in the cloud, then go and have a look at the video on Pegasus Business Cloud. It will show you how Opera 3 can be run from within the cloud itself. And as you see, there's a whole range of other videos available to you. So I encourage you to go onto pegasus.co.uk, product demos. Okay, that concludes what I'm going through here. I'd just like to thank you for listening to this video. I hope you found the information useful. If you need further information, then please feel free to contact your Pegasus partner. I'm sure they'll be more than happy to help you. Thank you.